Equity. Equity itself in the accounting equation is made up of three elements: equity itself plus revenues less expenses. And within equity, you can find three elements. You'll have the capital itself. So that means the capital invested in the business, less any capital withdrawn by the business's owners, plus any retained profits or losses. So this can be a bit involved, so we're going to look at it step by step. So capital invested in the business can include cash, motor vehicles, land, buildings, and basically anything that the owners decide to invest in the business. Any capital withdrawn, known as drawings, while it is usually cash, can include motor vehicles, inventory, or anything else the owner wants to withdraw from the business for their own personal use. The key word in this is personal use. If a question says for their personal use, you are looking at a transaction involving drawings. The third element in equity is retained profits and losses. Retained profits and losses are simply any profits or losses generated by the business from previous years. The last two elements in equity are revenues and expenses. They are distinguished from assets and liabilities because they are used up immediately. If you remember from when you looked at assets, assets are items that are going to have a future benefit. This is not the case with revenues and expenses. They're going to be used up immediately. So if you have an item that is going to be used up immediately, you're going to have either a revenue or an expense. Revenues, like the name suggests, are revenues made during the current period only. They are to be added to the capital account. Expenses, likewise, are expenses made during the current period too. They are subtracted from the capital account. Make sure you are able to distinguish the current revenue and expenses from those that are due to retained or previous profits and losses. After all this, the accounting equation now looks like this. Assets, current plus non-current, minus liabilities, current and non-current, equals equity. Capital invested, less capital withdrawn, plus retained profits, plus revenue, less expenses.